G'day there, Investorholics. Welcome to the ETF Spotlight review. Today we'll be looking at ASIA, which is the BetaShares Asia Technology Tigers. This one's a very, very good performing ETF, although it is new. It's about 2.5 years old. So over the long term, I think Asia could be a region that delivers good economic growth, which should be helpful for all those underlying businesses in those regions, and therefore if you're invested in those areas, be good for you as an investor. So ASIA or Asia provides low cost exposure to 50 of the very best technology tigers listed in Asia. You get exposure to Alibaba, Taiwan Semiconductors, Tencent, Samsung, and those top big companies. So stick around, have a look. Definitely worth the 8-10 minutes of your time, and hopefully you'll actually learn something and you can put it into practice if you like. Okay, let's take a look at BetaShares Asia Technology Tigers. Asia, which is a pretty catchy little code there. Investment objective: Asia aims to track the performance of an index comprising the 50 largest technology and online retail stocks in Asia, obviously excluding Japan. That includes Alibaba, Tencent, Baidu, and JD. So we're getting exposure to Asian tech giants, gaining exposure to the technology tigers, leading the Asian technology revolution. So definitely we're chasing growth here. Due to its younger tech-savvy population, Asia is surpassing the West in terms of technology adoption and the sector is anticipated to remain in growth phase for quite a while. Global diversification is always good. So one trade, ASIA provides diversified exposure to a high growth sector that is underrepresented in an Australian share market. So pretty much we're just trying to get some exposure to something that we can't get if we're just solely buying here in Australia, and complements any investments you may have in the US, so US technology exposure. Okay, so BetaShares Asia Technology Tigers ETF. We had a net asset value of $11.17, trading just above that at $11.25. This one has a market cap of $659 million. Management costs is getting up there. I think this one's almost the most expensive of the four. 0.67%. You get a distribution in January and July, and it's pretty low, 1%. Yeah, so pretty much if you're paying, just as an example, if you're paying 0.67%, that if you've got a $10,000 investment, that means you're paying $67 a year, just to give you guys a bit of a visualization of what 0.67% is, if I can get that out. So Asia is a reasonably cost-effective solution for investors seeking exposure to the Asian technology sector. But with all these sort of Asian technology ones, you're going to get, especially the more broader ones, very, very similar top 10 in all of them, because all these big Asian companies are actually technology companies. So that's just something to keep in mind. So investor can gain exposure to the top 50 largest Asian technology companies, obviously excluding Japan, in a single ASX trade. Asia aims to provide long-term capital growth potential as a primary driver for returns. The fund can be used to introduce regional, sector or asset class diversification to a portfolio. We should always do some more research, so check out VEA and IAA. So we're looking at Tencent, Taiwan Semiconductor, Samsung, Alibaba as the top holdings there, all clocking in at 10% of the fund. We're looking at returns here since inception, pretty good, 30.46%, pretty good I should say. That's actually quite phenomenal. Over the last year, so if you'd have bought just after the most recent crash, sort of March, anytime after March, sort of into April, May, you would have done 60%, so over 60%. So the top three sectors in allocation here are internet and direct marketing, retail at 25%, semiconductors at 21%, and interactive media and services at 18%. So top country allocations, obviously these ones are all pretty similar. China at 49%, Taiwan at 24%, and then South Korea at 19.7%. So the Beta technology range has been designed to provide investors with access to the most exciting technology themes from around the world in a single ASX trade. So this one's performed quite well over the lifespan here, so definitely one to keep an eye on, one to do an ETF to do some further research on. Pretty phenomenal since inception of September 2018. So I mean, it hasn't been running long, but you know, if you can keep up at half this, you know, if you can do 15% per annum for the next 10-15 years, you know, that's massive gains for the shareholder. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. Because KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your investment horizon and crack your financial sky. Thanks guys, see you later.